What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what happened today intraday to Tesla, what happened to the overall market, and also what happened going into the new data that came out for the markets for Tesla moving forward and the debt ceiling and how it could affect Tesla as well. Before I break anything down about what's going on with the overall market and talk about Tesla, I do have to mention a couple of things before starting. Firstly, I am not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 10 free stocks, each worth up to $2,000. And if you put in $1,000, you're guaranteed up to 15 free stocks. And you can be a free Tesla share, and the offer runs in 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was up 3.11% for the day. In the morning, I released a video during the pre-market, and I told you that Tesla was looking a little bit choppy. I wasn't expecting it to just blast off immediately. I told you we might see some choppy price action in the very beginning for like the first hour or so. And then I told you guys that it may take a couple of hours for Tesla to really start pushing, and Tesla did take some time. In the beginning, Tesla opened here, got this giant push up as soon as we opened, then it came right back down with the market. It came all the way back down to about 210, but we held above 210, which is a good sign. And then Tesla closed just around the 210s for the hourly candle. But then I told you guys that on the larger time frames, right? We still had some bullish looking signals for SPY, and I told you the odds are greatly favored upside for the markets, especially considering all the puts expiring. As a result, Tesla started pushing, and I told you if Tesla broke 212.5, we're going to be watching 214. If that broke, and you can see right here, Tesla got a rejection candle right here on the 30-minute time frame off this 414 level. There's some resistance here. Tesla had to fight for some time before it finally broke above that. Then the next major zone would be in the 217s. 216.7 basically to about 217.83 was major resistance. Tesla has gone rejected or chopped around this zone many times in the past, and this is where Tesla got the rejection. I told you if Tesla broke 217.83, we would likely see it get to 220, but it ended up failing to break that. So that was just a hypothetical situation. Tesla failed right there. Then later on, as the day went on, I released another video and I told you that I'd be very careful, and I secured all my profits on Tesla and on SPY because even though it was possible for the market to pump more, I believe that I'd be very careful, and I just wanted to secure my profits for the day. And I was getting some signals suggesting that the market could get some bearish price action, a very technical pullback going into the next week. And this was based off what I was seeing on the QQQ and the NASDAQ, and based off the extreme levels we saw many indicators at for SPY. And then Tesla happened to drop. I wasn't calling for Tesla to drop for the day. It just happened anyways. Uh, and then Tesla closed up only 3%. It was up almost 5% at some points. Overall, pretty decent day for Tesla. Still a nice green day, closing above 213, almost at 214, just barely below support. And overall, Tesla's looking pretty decent. However, there is a risk of downside for the markets. I just don't know if we're going to get one more pump thanks to Joe Biden and then see the downside, or if we're just going to start seeing downside from here. This will depend heavily on what happens to the NASDAQ and many tech stocks. But let me break down exactly why again, and then clarify something else. So President Joe Biden is going to be signing the debt limit bill very soon. Biden signing it is going to be the final nail in the coffin for the debt ceiling, and it's going to help the US to avoid the defaults. The debt ceiling limit is not done yet. It's not like increased just yet. We have to wait for Biden to sign it. So I told you guys this earlier, and this could become a buy the rumor, sell the news event, seeing the fact that the QQQ and the NASDAQ are starting to develop some signals that could lead to a move to the downside. There's just no confirmation of the move just yet, but there is a possibility that it could come, and there's a good chance looking at the current technicals. Now, the market makers held the market up thanks to the options chain. Notice how there were 1.3 million puts expiring just a couple of hours ago. And now, by the time the market closed, it's over 1.4 million. So a lot of shorts kept piling in, trying to bring the market down, and they continued to get squeezed. Max Pain even went up because of that. So very interesting stuff. The market makers sided with those going long because the market makers were taking the opposite positions. And now, going into the data coming out, there's not much coming out for next week. Next week isn't as crazy as this week was, and I think the week after that's going to get crazier. But next week specifically just has like PMI data, and then we have some mortgage data, nothing else too big, used cars data. Consumer inflationary expectations are going to be very important for next Monday. And then for Friday, I think it's not Friday. I think for Thursday, we have initial jobless claims and all that. So the data is not going to be as huge for next week. But the week after, starting June 12th, things are going to go crazy. Consumer inflationary expectations. We have CPI and FOMC all in the same week. And that's going to cause crazy volatility in the markets and also for Tesla. Now, let me just add that for SPY, for next week, there aren't too many options expiring until Friday. And for that reason, the market makers can afford some downside. They're going to be okay with it. And they may, the market may start to see some downside as a result of this. And also because of, once again, buy the rumors, sell the news, and because of price exhaustion and some signals we're getting. A lot of people are very greedy right now. People are just buying the dips. They're turning into perma bulls. That's okay. You could do whatever you want. I'm not really controlling you. But on this channel, I am not a bull or a bear. I'm very different from a lot of people. I simply look at the chart and then react to what it's telling us. I was bullish for the last few weeks and look at how the market pumped. I was leaning more in that direction. And now I'm starting to lean in a little bit more of a bearish direction. Not extremely bearish. I'm not saying the market's going to crash. I'm simply saying that the market is due for a pullback and we're likely going to get it given the technical signals and historical data. And let me clarify, am I being very negative and pessimistic? You could say that if you want, but the truth is, I don't intend on acting that way. I'm simply looking at the charts, looking at what the charts are telling us. And if the charts are suggesting the market may cool off, I'll just tell you the truth. If the charts are telling us just like a couple of days ago that the market would pump, like I said, I'll say it. And right now, we're getting signals that are suggesting the market may cool off very soon. And I am leaning in that direction. Okay? We could get one more pump thanks to Joe Biden signing the bill, but we're likely going to start cooling off a bit because the market's pricing in all this upside, all this excitement thanks to the debt ceiling, and there aren't too many options expiring between Monday and Thursday. On top of that, once you see the QQQ and other tickers, I will talk more about that. But I'm not saying the market's going to crash right now. Let me just clarify that. Could the market crash in the future? Sure, it's still possible, but there's no confirmation that we're going to, crash to new lows or anything like that. Why? Because we have so much support. First, SPY has to break 420, then we have to break 410, 409, 400, 390, 377 to 380, for example, 365, the low from October. We have so many support zones. And I don't see us just instantly crashing through everything at once. So many people have been shorting the markets, and that's part of why the market is valued the way it is. On top of that, earnings have not been that bad either. We got some pretty decent earnings from Nvidia and Apple, and even Tesla did relatively well. Just their margins weren't the best, but besides that, they did relatively well. Maybe their future earnings won't be as great looking at inventory levels, but I'm still very bullish long term on the markets. For the short term, I'm anticipating a correction, a very healthy correction. Not a crash. I'm not going to be super pessimistic and try to scare anyone. Just a very healthy correction is what the market is due for. I'm going to explain exactly why in just a couple of minutes and talk about Tesla. As for Tesla, going back, price-price ratio pretty decent for Tesla. Tesla's outperforming the market again, still holding up quite nicely. Looking back, Tesla has some support. It had this resistance close to this like 217 area, support at 211 and also at 213. 210 to 211 would be some. I would say 210 is more significant. It's not showing it just yet. And also 213 to 214. Looking at the data, when it comes to seasonality, Tesla tends to be green on Mondays, but this will depend on the market and how it responds to Joe Biden. June tends to be a strong month for Tesla. So just because I talk about Tesla getting some potential downside with the market, that does not mean I'm saying Tesla has to crash for all of June. It could just be a temporary move to the downside for a few days or even like a day or so before we could bounce. That's another possibility later on, but there's no sign of the bounce just yet. The odds are still favoring that other move. The short interest on Tesla went up again. We saw about 45 million Tesla shares shorted just a few days ago. And as a result, that helps Tesla squeeze as these shorts started covering their positions. When we saw all this shorting on Tesla, notice how it pumps so much. That shows that when so many people, institutions are doing one thing, market makers like to cause the opposite reaction. Tesla had good volume, 164 million. That's awesome news. And on top of that, the short volume for Tesla is still at 65%, still a little bit high. And once again, that's helping Tesla to squeeze more. Now, some news came out that Tesla surprised us by gaining full 7,500 tax credit for the cheapest Model 3, starting at $30,000. That is good news for Tesla moving forward, and Tesla is doing what it can to incentivize more sales for their Model 3. In fact, let me just look up more inventory levels for it. I think it's very important to go over this. For the Model 3 specifically, you could see inventory levels are just very high compared to the Model Y, so they need to incentivize more growth for this model as fast as they can. The Model 3 needs more growth. They have to do whatever they can to get more sales. That's why investors were hoping that Elon Musk would say something. He didn't really say anything about the new Model 3. But I'm still optimistic that as the summertime comes, we tend to see Tesla sales improve. And I'm very optimistic that by many years, Tesla still has insane growth to come as Tesla's going to be expanding their production capabilities. Elon Musk going to China is pretty good news, but not entirely great in my eyes. That's because of the tensions that exist between the US and China. And you also have to consider the importance of diversification, in my opinion. But if they do end up closing the deal or expanding their production mechanisms over there, that could still be good news from a business standpoint, as Tesla could take advantage of the cheaper labor there and simultaneously the specialization of China when it comes to production and other factors like that. So my views are mixed on the whole like Chinese expansion, Elon Musk going there, but for the most part, it would still be good for Tesla because they could still get a crazy amount of sales. It's just a little bit riskier because of the current tensions from a geopolitical standpoint. But besides that, I'm still very happy with how Tesla has been doing fundamentally. I still think Tesla is very strong despite some short term fluctuations, and I can't wait for what the future holds. Now, as far as the market goes, the jobs report that I talked about yesterday, basically the data showed a higher unemployment rate. I have it right here. 3.7% versus the consensus of 3.5%. So a little bit harder unemployment, but the economy simultaneously added over 339,000 jobs, at least on paper, right? At least that's what the data is saying. Not saying the data is 100% accurate, but it is what it is. The market liked it, and this fueled the market's soft landing narrative. Did this truly signify great news? Not really. But the market makers wanted us to interpret everything this way. Why? So they could help squeeze more shorts and get buying pressure as algos bought like crazy today. That's what helped SPY pump. So now let's break down these charts. I'm not going to talk about too many tickers today. I'm going to talk more on Sunday about like Nvidia and all of those. Maybe I'll talk a little bit tomorrow, but for now I want to keep this short. SPY has a bearish cross on the 30-minute time frame. The trend is trying to change just a little bit, but this will depend on how we open. We have some resistance at this 428.75 to 429 zone. If it breaks it, we could see 430 for one last pump before it starts downtrending, but I'm not leaning that direction. I'm thinking that it's more likely that we just start cooling off from here. Once again, it depends on how the market responds to Joe Biden, but I'm leaning more bearish, at least for now, because when you look at the trend, the RSI is just very overbought. It's been overbought for quite a while. We have this bearish cross here. I think on the 4 hour, it's still holding up nicely. On the 1 hour, we also have this cross potentially coming on the PPO. So the odds favor either it pumps a little bit more, then it cools off, or it just starts cooling off from here and makes its way closer to like the 425 imbalance zone. As for Tesla, if we're bullish on Tesla, it could break 214, break that, then we could make our way back to the 217. If it breaks 217.83, 220 could come. However, I am leaning in the direction that it's going to respond to the NASDAQ. And the NASDAQ's starting to give me some signals that don't look that great for the bulls, just temporarily, right? Not saying it's a crash. That's not what's coming out of my mouth. I'm just saying a very healthy correction. That is normal for any market. I don't care if it's a bear market or a bull market in your eyes. If it's a bull market, every single bull market still has correction phases. It has to. We have to cool off our RSI every so often, right? And if you don't like me talking about negative things, or if you consider what I'm saying negative, consider that Tesla was at 217 and it dropped about $4. So as great as Tesla is, it can still see some downside alongside many stocks. So here's what you're going to be watching for. If Tesla breaks below 212, we have this imbalance all the way down to 210. It's going to come all the way down there if it breaks below this support right here. So I'm going to be watching that, and I think the odds favor that happening if we do end up continuing to drop. And that could happen as the market potentially sees some downside. Now, Could the market pump a little bit more one last time? I mean, if Tesla does, pump one last time, let me just mention this. We could get a 217 retest, maybe 220 retest, and then come all the way back down. But I'm not leaning in that direction for now. It depends on the news. I'm leaning more towards Tesla pumping just a tiny bit, then just continuing to sell off to about this 210 first before trying to bounce off that. For the QQQ, I'm leaning in the direction of this thing potentially getting a sell-off. Uh, could we pump one more time, excuse me, because of Biden before we come down? Yes, but I'm leaning more in the direction of us cooling off a bit because just look at the bearish divergence on this thing. It's pretty big, and we have a bearish cross on the hourly time frame developing. Typically, this would be a bearish signal, so it looks to me like the QQQ, if it breaks below 353, we're going to be looking for 350. Now, I'm not talking about, the QQQ going to 300 or 310 or 320. I'm not talking about crazy low numbers like that. I'm not going to be that pessimistic. The next major support is going to be 353. If we break below that, I'm going to be watching 350. Sorry, 350. All these numbers are just driving me mad. 350 is going to be the next important zone to watch for. And I think we're going to be heading there on the QQQ very soon. That's what my gut is telling me. And that's what the technicals are starting to suggest. I could give you guys a much more in-depth update once we have the pre-market data and the Sunday video in. But for now, that's what I'm seeing. NASDAQ is looking not the best. We're about to see momentum slowing down on it. It has a bearish divergence on the RSI and the MACD. The price is going higher, RSI is declining, making a lower high, so is the MACD, and we're losing momentum on the PPO right here. So this tells me that if the NASDAQ does end up breaking the support, it's going to likely come down to fill this gap down to like the lower 13,000s, which could bring down the tech sector, which could slow down Tesla and NEO and many other tech stocks, from Amazons to the Googles and etc., blue chips and etc., consumer discretionaries, and the list goes on. So that's what I'm seeing for now. That's where I'm leaning towards in this market right now. Could we get a final pump? Maybe, but I'm just not thinking it's going to be that big. I'm leaning more towards the downside. We are due for it. I mean, the RSI on the hourly on SPY is at 79. That's pretty insane. So that's what I'm seeing, and I think it's very healthy for this to happen. I will give you guys a more in-depth update on way more stocks by Sunday time. But for now, that's what I have for this video. I want to keep this one short. And let me just remind you all, okay? I'm not trying to be positive or negative or anything like that. I'm very positive in a way because when it comes to the future, it's still very bright for Tesla and the market. But I don't want to be a negative Nancy or anything like that. I'm simply just reading the charts, right? There are times where the charts look bullish to me. So I was talking about Tesla getting a bounce, Tesla exploding. There are other times where I say Tesla may cool off a bit, and it happened, right? Remember that time earlier during the week when I told you that we were getting some bearish signals and Tesla came down to 199 and 195, I mean? Do you guys remember that? Well, it happened because the TA caught that move. TA cannot catch every single move because of the news, but it tends to be correct about catching, moves like that. And typically, the reason why I'm leaning in that direction would be the exhaustion we're seeing and historical data based off the debt ceiling, right? When I say historical data, I'm referring to like buy the rumors, sell the news. Market is pumping, pricing in everything beforehand. And once the news is in, the market may just start to cool off finally. Also, the market makers are not as incentivized to pump the markets as hard for the start of next week because of the options chain. So it's also suggesting that as far as Tesla goes, we have the next imbalance around the like 210 area. I'm going to be eyeing that. Not sure if we bounce first and then come down or if we just start coming down from here. I'm not going to be playing it though. I'm going to be prioritizing like SPY and QQQ and maybe like futures. But for now, that's what I have for this video, okay? I'll see you guys in the next one. Have an absolutely spectacular Friday night. Remain calm, cool, and collected. And don't forget I have some merch for you guys. If you want to buy a cap, a hoodie, a tank top, or a shirt that says money is calling to the moon or something like that, buy the dip with the card right there. It looks pretty nice. That's up to you. And don't forget about the Moomoo link. The offer ends very soon. Put in $100 and you're guaranteed up to 10 free stocks. All right, guys. Thank you all so much. Get ready for Biden to sign the deal. And we are still looking very bright for the long term, regardless of these fluctuations. Tesla's in amazing hands. I'm very bullish long term. It's going to break the thousands over many years. And I'm not losing faith in the company, despite what I say about some potential downside for the short term because of what the technicals tell me. All right. Thank you. Have a great day and peace out.